It is that time of the week once again. A very important day for Bitcoin as Bitcoin looks to get its weekly close. Guys, in this video, we're going to dive down into the world of Bitcoin, take a look at some charts, take a look at some data from Glassnode to see exactly what's going on here and what the most probable outcome is for Bitcoin's weekly close and what this might lead to slightly longer term. As we get into this video, if you find it useful and informative, hit the like button. Really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with everything that we do here at 𝗕𝗘𝗪𝗧. Right, with all that said, done, and out of the way, let's actually jump down into the desktop, take a look at a few charts and see what's going on here with Bitcoin. Okay guys, so here we are. This is the weekly chart with Bitcoin. We are using Bitstamp for this, and we are doing a calculation on USD, right? And this is a really important chart because we obviously can see all the data back from 2011 through to current, right? So we can analyze the various different bull runs and bear markets. And I know a lot of people are calling this the bear market at the moment. Again, we saw a similar narrative just around here. We're seeing a narrative right now, right? And when we actually take a look at this over the periods of time, we can actually acknowledge what is a bear market, okay, and what is not a bear market. Okay, it's really important that we understand that because these red areas of this Gaussian channel, these are the areas where bear market is confirmed by basically showing the value of Bitcoin completely diminishing. Specifically, what we're talking about is the weekly close candle inside of the Gaussian channel, both here in 2014 and over here in 2018, after, of course, the 2013 high and the 2017 high. Okay, November, December. It would be nice to see a high in January, for example, right? Now, obviously, we have is a bear market scenario that we are kind of looking forward to a point because that is really where your money is made. It's not really made in the bull run. It's made when you're actually investing huge positions, at absolutely fantastic discounted rates in a bear market, right? You build up a very good position in your altcoins. Whether you want to buy a load of Bitcoin at the same time, it's entirely up to you. It's not the best performer, but it's still an investment nonetheless. And it's basically in these red portions of this Gaussian channel. This is where you actually get the maximum kind of value for your buck and where you want to be investing, right? And the bull run's only really about two things: one, having decent price expectations and not going, becoming too greedy, and the second one is about managing your emotions, not letting fear get the better of you, not letting greed get the better of you, okay? Now, back to the concept of the video here, and what we're actually talking about is the weekly close candle with what's going on most recently, not just talking about this Gaussian channel and bear markets and bull runs. But we are seeing here that we've wicked into this Gaussian channel a few times, and right now we're actually riding pretty positively on the upper side of this Gaussian channel, right? We can see that basically if we had come down, we actually wicked into it this week, but anything kind of lower than 47,250 approximately dollars would have been basically a big bear signal to say that we were going to be in a bear market, dropping back down. Loads of people would have picked up on this, traders, and they would have acted accordingly, shorting and basically seeing the whole thing kind of crumble down. But what we're actually seeing is the reversal, right? We've seen a lot of manipulation, specifically with Bitcoin price. Do check out my Bitcoin manipulation video if you haven't seen it. But basically, there's definitely controls going on support and resistance levels. Okay, making retail investors feel very uneasy and basically shaking you out of the market. Whether you are kind of going over long positions, short positions using leverage, which is never a good idea in my opinion. Not a financial advisor, I can't tell you what to do or what not to do. But leverage, in my opinion, is it gets people wrecked. People commit suicide over it. It's incredibly dangerous if you don't know what you're doing, and that's exactly what you see time and time again. Retail investors doing 100x on something they don't really fully understand and getting absolutely wrecked because of it. Now, market makers, whales and institutions, etc., they can kind of see all of that kind of data, but above and beyond that, market makers can also see stop losses as well, right? So it's important that we understand that all of these kind of things that are going on with Bitcoin on the smaller time frames, with very specific price points being achieved to the penny, it kind of makes me feel that we're seeing these market makers actually go after all of those stop loss positions, the short in, the long positions, all of it, right? And it's all being mopped up before we start to see that growth to the upside. I think the volatility is going to continue probably for the rest of this year. We'll close this year, and then I think basically come the 1st of January, we're going to be moving up very, very significantly to new all-time highs, which is just unfortunate the level of manipulation that's kind of going on in the space. But obviously right now, this is actually looking very good for the weekly close, right? We're above the Gaussian channel, right? And this is really important because this is obviously a key week, right? Now, or a key moment for Bitcoin. There is a couple of things that are potentially concerning in the last kind of 4 hours of this close, right? So we come down into our chart here. I'm just going to quickly turn the weekly Gaussian channel off here, jump into our hourly view. And then what I'm going to do is just expand this up a little bit and then talk about what's kind of going on right here. Okay, so we've done a lot of work with Bitcoin during the week, kind of picking out all of the various different price points that are being achieved. And we can actually see a few just in here. If you actually take a look just up in this top section here, where the H is the high, wick high. If I hover above this candle just an hour ago, you can see how it hit 50,777 to the penny. Okay, we can also see as I come across this one, the hour before, the high was achieved at 50,490 to the penny. And as we come across several of these others, some of them are okay, but here's 49,910 to the penny. Okay, so basically we're seeing that there's a ceiling being achieved, reached, and limited, and then you're being pulled back and so forth, right? So we can see that the direction of the market is being controlled, both from a support level when support is required, but also resistance when resistance is required. Okay, so the market is being controlled. I don't know who's doing it. This is obviously Binance, whether it is Binance, the market makers as a whole, a group of collective whales, I don't know. But what is interesting is obviously we're hitting pretty much for all week long, we've been hitting these very, very specific price points. So 1 or 2, 3, 4, maybe even 5 coincidences you could acknowledge. But when you've got 20 or 30 candles all reaching to the penny, it's very odd behavior. Okay, so do check out my manipulation video if you want to know more about that. So obviously we have managed quite well, considering. We obviously, this big red line is the Gaussian channel. I've put that marker in there at about 47k. It's a little bit higher than that, but you get the idea. And we worked in, we actually tracking quite nicely to the upside, finding some resistance up here. Now, this resistance line is a previous A wave resistance high before pulling back to the second or B wave, right? And what we actually found was this being a resistance blocker for us, pulling back down. That actually came in at 49,000. If I actually show that on there, it wasn't to the penny. So yeah, 49,699 dollars, right? And then pull back. This is your ABC correction before we started to have this ABC move to the upside. Now, this ABC upside that started today, we can see here we had the A, the B, and the C. Now, this is actually a really good ABC representation. Obviously, when you've got kind of people controlling the support and resistance, you can kind of see how this one plays out, because the A wave here measures exactly from 0 to 1, okay, so that basically measures 100% of our move on our fib here. We pull back down to the 702, okay, actually double tap on this area, and then we basically move up to the 1.618, right, another key area on the fib levels. Now, if we actually take this and we put this to the bottom of our wave B, we can actually see that wave C comes in at 1 and 0 comes in at B, which basically means that our wave C is exactly measured exactly the same as our wave A, which is pretty much a very perfect ABC move, right? Other than the exception of the fact that a B wave would normally be a little bit lower. This is actually really interesting that the math has actually calculated out perfectly for a perfect ABC move to the upside. Again, not too unsurprising when you can consider there being manipulation in the space. But again, a 1.618 move here for BTC. Now, my expectation, as you can see, I actually drew this up before coming on here, the current candle coming down. This is a pretty steep candle considering we're still overbought on our stochastic RSI. So this is a little bit alarming as to whether or not we're going to drop down significantly lower or not. But obviously, we do have some interesting areas to kind of watch out for. In a roundabout way, I would really like to see a C wave bounce from this area here. So if I actually pull this back up, we can already see that A wave would be lower. Okay, so an A, a B, and then a C actually coming in line with our previous resistance blocker. I don't think that's necessarily the case. I think the A wave is probably going to bounce from this area. We're going to then see a B wave high, and then a probable pull back here with wave C. So I'm watching out for this ABC move to the downside with Bitcoin. I can see this something kind of happening here because we are overbought on this stochastic. With that being said, though, we can be up here for quite some time, as we have been previously, depending on what the market is going to do, or more specifically, depending on what retail investors do. If they short, go long. Basically, these people who are though controlling the resistance and the support levels are going to be able to make this do whatever they need it to. Whether they're going to keep it down in the oversold area for a period, whether they're going to keep it up and overbought for a while. These are things that you can see going on here with Bitcoin across multiple different levels. Now, with that being said, knowing that there's manipulation here, this is all just about kind of, I guess, farming the retail investors at the moment who are consistently doing the same thing over and over and over and expecting different results. It's never going to end well. So obviously, until those retail investors get exhausted or run out of cash to continue piling in, I think this is going to continue. As I said, probably towards the end of the year, come the 1st of January, like we saw at the beginning of 2021, it was basically like a switch being flicked and a huge candle to the upside was generated. I do anticipate that this isn't going to last forever, and eventually we are going to start to see a bit of a run to the upside. But whilst retail investors keep piling in the way that they are, thinking that the bottom's come in, or looking to short it more specifically when people think we're going into a bear market, then do expect this volatility to continue. Now, on that note, I think it's also important to bring up Glassnode. Now, Glassnode is a fantastic way to analyze exactly kind of what's going on with various different aspects of Bitcoin or a few other altcoins as well, right? And there's a couple charts in Glassnode that I really do like. And this one here is one of my personal favorites. This is basically the exchange balances shown as a percentage, okay? Now, we can, of course, go into the inflows, the outflows, the net changes. They're all pretty good, kind of ways to understand exactly what's going on. Now, what's really important about this is over time, we saw that basically the balance sheet for Bitcoin on exchanges was continuing from a percentage point of view, as in more Bitcoin was coming in. This was actually going on until March of 2020. We all know what was kind of going on there. Huge crash with the crypto space. And then you started to see basically the bull run start and basically an accumulation of Bitcoin over time. Now, over here, this little blip that you can kind of see on the radar, this is basically the area of May, significant increase in and the percentage of Bitcoin that was held on exchanges before starting to pull back down. Okay, so you're in a bear market, what do you see? In a bear market, you see a percentage increasing on exchanges, and in a bull run, you see percentages decreasing. Okay, so here, for example, is going into or late 2016, going into 2017. That bull run of 2017. Here you can see that parabolic move where basically, August time, or July, August of 2017, lots of a huge dip with Bitcoin on exchanges. And then obviously, riding that up into the bear market. Now, we can, of course, take a look at this from a slightly different perspective. We can just take a look at it balances rather than taking a look at it from a percentage point of view. Again, it can help you understand whether or not, but it's a very similar pattern. Whether you want to just look at the actual value of Bitcoin or whether you want to look at the percentage of Bitcoin on there. Now, personally, I prefer the percentage view, but they're both the same. The other one that's really good to kind of understand whether or not we are seeing a huge influx of Bitcoin to exchanges is going to be this one here. Now, this one is your net position change. Is there a position change positively, as in more Bitcoin has actually gone on to exchanges versus that negative, which is basically Bitcoin leaving? So I'm going to actually just make this a little bit shorter. So we'll just take a look at 2021. This is May. This is basically that crash when Bitcoin was at 65k going down to 28k. Loads of people were calling that the bear market, only for that to reverse, right? And actually, what do you see here? Well, we see a little bits of pockets of green net change wise, but ultimately right now we're actually seeing more Bitcoin leave than go in, right? So net change is actually pretty positive in terms of supporting a bull run rather than a bear market. So what you're actually seeing is basically manipulation of the price to kind of make you feel that things are actually, going downhill and that we're going into a bear market, when actually the data in the background of everything isn't actually looking that way at all. Now, admittedly, this is only exchanges. There are things that happen off book as well. This is important to also understand. But it's also important to understand that a lot of Bitcoin does actually flow into exchanges, etc. Here again is more information around the inflows on Bitcoin versus the outflows of Bitcoin as well. So you can see that there's interesting kind of information kind of going on here. And it's always good to get an understanding, because basically if we actually come back over to that net position change, this will spike massively in the green when you start to see, the market getting ready for a huge dump to the downside, right? People will be loading exchanges up with their cryptocurrency, specifically whales, etc., looking to kind of exit out of the market. So one to watch out for. But right now, everything's actually in line with supporting a Bitcoin bull run rather than bear market, in line with the expectations of what is going on in the space. And what I mean by that is, a lot of people saying that if 69k was the top of Bitcoin, then ultimately, the lows are going to be very, very low. They're going to be incredibly low, in fact, too low to actually support the history of what's happened previously in the bull run or in the crypto space, specifically with Bitcoin. Now, the other thing I do want to kind of talk about is the head and shoulder pattern here. Now, this head and shoulder pattern is on the daily chart for Bitcoin. Okay, we are tracing up, trying to complete that right shoulder. What happens when we get to that right shoulder is going to be really interesting. We're either going to continue that blast to the upside, missing out altogether the downside, or we're going to see a pullback. Okay, that pullback and obviously breaking that neckline could see us with the bear market scenario. As you can see, that red line is halfway through that shoulder. So what is the likelihood here of going on and taking that dip? It's going to be an interesting one. And I don't think it's something that we are going to see, not from a probability point of view. I think we are more than probably going to actually continue that growth to the upside. And this head and shoulder pattern will be voided over time. So one to watch out for. My expectation is that we are going to push on up. Now on here, the other thing I want to kind of call out is this high and this high here. These are two very significant highs for Bitcoin. We had 67K and we had 69K. But do you know the correlation between these two things? Well, this one over here was $67,000 to the penny. This is obviously Binance and USDT. This may vary depending on the exchange and the pair that you've got it paired up with. Now, that is odd, right? I thought it was odd at the time, but these things can happen, right? One out of a dozen isn't too strange. You have the pullback, and then what do you have up here? You have $69,000 to the penny. These two are very, very odd. They're incredibly odd to have two kind of all-time highs to the penny like that. It means basically you're gearing up for a big dump at that very specific point and you brought the market down. Huge positions must have been a trigger for that. Now, when we actually take a look at some of these previous candles, you also have some very similar numbers. And it's not until you start noticing the pattern do you actually start to recognize it. We have 52,780, for example, 52,920 to the penny. Okay, so once you start to actually understand or start to think about how rare it would be that you'd have a closing candle or an opening candle or a wick high to a very, very specific number, whether that is on an hourly chart, a daily chart, or weekly chart, you'll start to realize that it doesn't happen this many times. It can happen, of course, but it should be rare, and it shouldn't be as consistent as it is here across this Bitcoin chart. That, to me, just speaks volumes, and we should not be shaken out of this market ahead of what I do expect to come in the very near future. Right, guys, I'm going to leave this video right there. If you have found it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe? Tap the bell, select all notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. With this said, done, and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.